For those of you that don't know, I'm Maggie, and I cannot stop laughing. That's my dog Nash in the background, who's just lounging on the pillows, and it is the cutest thing. So if this starts to bore you and you just want to look at something cute, look at baby Nash. So anyway, today starts the first video in a series that I'm calling Money Matters, because honestly, money does matter, and there are a ton of money matters. At the end of 2020, I put out this poll on my Instagram just asking what people were interested in. Going forward, I wanted my channel to be a little bit more useful, a little bit more helpful. I set out to make this channel to help people become more informed consumers, and I think a huge part of that is actually to make sure that you have a handle on your money so that you can actually go and consume wisely. Do you know what I mean? So today's video, the first one to kick it off, super duper high level, because I feel like we're all starting from a different point, and sometimes it's just good to hear basic tips. And so the focus today is on ways that you could be frugal and ways that you can start saving really easily now, just as a good base. So my hope coming out of this video is that you have more questions and you want to dive deeper into some of these topics. So please weigh in the comment section below. A little bit more on me and my background. So I was an accounting major in college. I am a licensed CPA. I was a practicing CPA for a couple years. I am no longer practicing, but I do maintain my license. An additional disclaimer for you is that I am not trying to give you very specific financial advice. These are just high-level things that I want you to research and think about and see if they would really apply to your life to make your financial situation a little bit better. The first easy frugal living tip that I have for you is the best advice that I think my parents have ever given me finance-wise, and that is to treat your credit card like a debit card. The reason being is that you should not be spending money that you don't have. Credit cards, in case you were unaware, come with a credit line, which means it's basically a loan from a bank. And they say, Maggie, based on your income and several other factors, here's the amount of money you're allowed to spend on this card per month. Honestly, I couldn't tell you what any individual credit limit is on any of my credit cards because I use the tactic, don't spend money that you don't have. So the only number that matters to me is the number in my bank account, not the number of my credit limit, because the number in my bank account is the only money that I have to spend. There's a million different reasons why treating your credit card like a debit card is a good thing. It helps you avoid interest. Most of you know that if you don't pay off your credit card bill on time each month, you're charged additional fees in the form of interest. And that's because the bank is like, hey, I lent you this money, you didn't get it back to me on time, so now you have to pay a penalty. Avoiding interest is a great thing because it saves you a ton of money in the long run, and you're not paying additional money that you're not getting anything back for. Don't spend money that you don't have, and you won't end up paying even more money that you don't have if you just avoid the interest and pay your credit card payments on time, if that's possible. It keeps your credit score high to have on-time payments. On-time payments are just one of many factors that go into determining your credit score. Now, if you're not totally up to date on all of the different factors that help determine your credit score, I actually have a whole video called Credit Scores 101 that outlines every single factor that goes into calculating that. I'll have it linked in the description box below if you're interested. You want to have a bunch of on-time payments because you want to show the bank and other future lenders that you can be trusted with money that they lend you and that you will pay it back on time. All right, the second really easy frugal living tip, especially in your 20s, is to start saving early. It is never too early to start saving. A couple of tactics that I implemented fresh out of college are the ones I'm gonna share with you today. Once I got my very first paycheck, I kind of took a look at my overall budget and what my monthly expenses were, and then I looked at how much was left over. And of the amount left over, I decided how much of that I wanted to go directly into a savings account, because my goal at that point was to create a nest egg of like 3 to 6 months of living expenses just in case something crazy happened. What if I got laid off? Or what if I got in a car accident? Or what if I don't know, had to have unexpected knee surgery like I had to have last year? There are so many unforeseen things that are gonna come up in your life that you definitely want some sort of nest egg. So I started small and started with just a savings account to get it out of my checking account. Get it out of sight, out of mind, to where I would never touch that money. Another tip to kind of go along with that monthly savings amount is that as your income increases, increase that savings proportionately. That really helps you live within your means. It allows you to save more at a quicker rate to where you could really reach that nest egg faster. Within this savings category, I also want to encourage you to take advantage of your employer's 401k savings plans. If your employer offers this, this is a really great way to save toward retirement. So you're thinking long-term money that you won't touch until you're ready to stop working. Now, the cool thing about 401ks is that your employer oftentimes will offer some sort of matching percentage. It could be 1%, 6%, 10%. Every company is different, so I don't know what your specific situation is, but a big tip is to contribute at least the amount that your employer is willing to match. So if your employer says, I'm gonna match up to 6% of your contributions, you should contribute at least that much so that you can take advantage of the maximum amount of free money from your employer. Another good tip is to find some sort of other savings mechanism that isn't available to you right now, because it can be very tempting to dip into your savings. Another good vehicle is some sort of IRA account. So I personally have a Roth IRA account, which means that I'm contributing up to $6,000 per year in after-tax dollars. So I'm paying taxes on that money now while I'm in a lower tax bracket, because I'm banking on the fact that with my annual salary increases, I will eventually be in a higher tax bracket later in life. So then later in life, when I'm in a higher tax bracket, I can take it out tax-free and not pay any penalties on it. So that's why I personally have money in a Roth IRA. But again, this could probably lend itself to its own video about traditional versus Roth IRAs so that you can maybe determine which one is best for you in your personal financial situation. But that's what I'm utilizing right now. All right, the third easy frugal living tip is to prioritize paying off your debt. Now, I want to start this by saying that not all debt is bad debt. In fact, when you go watch that credit score video, you'll see that lenders do want to see that you have several lines of credit and that you do have several types of debt so that they know that you can be trusted if you want to take on a new debt type. So for instance, Brian and I have debt in the form of a mortgage. Now, we're both very fortunate in that we don't have student loan debt, but that is a reality for a lot of people. The best tip that I have for you here, if you do have student loans or any other debt that you're trying to pay off, take inventory of that debt and look at it. What are your interest rates on those debts? And then prioritize those with the highest interest rates, because that's the stuff that's really hitting you the hardest. Let's say that you have student loans amounting to $25,000. You're going to be responsible for paying back that entire $25,000 known as your principal and the interest associated with the bank lending you the money. So again, take a look at your debt, prioritize those with the highest interest rates, and try to get those paid off as quickly as possible. All right, the fourth super easy frugal living tip barely even changes your habits, and that's just to compare prices and shop around. This is good for so many reasons, namely saving money because you're looking for something with a lower price for the exact same item, obviously. But there are other things that I want you to consider here, because I feel like there's this overarching thought that maybe always buying in bulk is better than not, when that's not always the case. I really would encourage you to get in the habit of calculating the per unit cost of whatever you're going to buy. So this can help you identify like really bad deals that marketing is trying to get you to take advantage of. So for instance, maybe you need some new toothpaste and you see that one tube of toothpaste is $5, and then you see what they have marketed as a value pack, which is 3 tubes of toothpaste for $15. Well, that's the exact same price for toothpaste. And if you don't need 3 of them right now, you don't need to buy that one. If it was 1 tube of toothpaste for $5 and 3 tubes of toothpaste for $11, that is a good deal, and I would buy that because each tube of toothpaste is less than the singular tube. And it just takes a few additional seconds of your time in the grocery store to whip out your calculator, or you could do some quick mental math and figure out the unit cost. But another reason why comparing prices and kind of shopping around is good is because it can help eliminate impulse purchases. You may want that thing on the shelf immediately right now, but if you're like, I'm gonna take a step back, look on the internet at home, see if there's a place I can get this cheaper, and then by the time you finish your research, you may figure out you don't want that item at all. All right, and the last frugal living tip that I have for you is do not feel like anybody is above a coupon. Coupons are just free money sent to you in the mail or in the form of cashback sites, or maybe it's in the form of a promo code, but that is just money back in your pocket. With sites like Rakuten and Honey that make it so easy, they've become so mainstream, but if you're not utilizing Rakuten when you shop online. It's a site that allows you to get a percentage cash back on your purchase just by shopping through a specific web link. Like, it is the easiest way to get money back in your pocket for shopping you were already going to do. Honey is another great resource, and it is basically a promo code finding site. So when you go to a website, it'll say Honey found like 4 offers, and you can automatically apply those offers. It will test them all out, and it will go with the one that gave you the largest discount on your item. It is super cool. I used to always shop through like Retail Me Not or coupons.com looking for promo codes and like trying them myself, and Honey kind of does everything for you automatically. Just do your due diligence, figure out ways to save. It takes an additional 3 to 5 minutes for you to use those coupons or find them or look for a better deal, and it saves you so much money. So that is it for this video. Again, super high level. Hopefully this was something that just got your wheels turning, or maybe I introduced new topics that you knew nothing about. I am more than happy to go into more detail about anything that you want to learn more about. We can walk through specific examples. I can teach you how to calculate principal and interest payments. Whatever will be helpful to you, that's what I want to share. So please leave your feedback and your comments so that we can have good open dialogue and I can create some content that's really helpful for you. If you like this video, then like it, stick around, subscribe, join the community, and I'll see you in my next one. Bye!